Hi, my name is Christopher Terry, CEO of iMarkets Live, and I want to go over some entry techniques, which is a good way to enter and which is a bad way. We have two examples, the EUR AUD and we have the EUR GBP, not that one, the EUR GBP, there you go. And we're going to look at both scenarios and I'll show you some entry techniques. The goal is that we always stay on the right side of the market and not to take too much risk. If you looked at my other videos on the website, you'll see that I went through some entry techniques, and there's no reason to have such a wide risk. I don't particularly do that. I don't expect anybody to do that. I like to take trades with the smallest of risk. Now, if you want to do a wide risk, that's fine, but I'd rather you have some entry techniques, and if you watch my other videos, it goes into it. So let's look at this now. Let's take a horizontal line and emulate the entry area, and I could look at the lower time frame. Let's go down to an hourly chart. Okay, let's go down to an hourly chart. So, a couple things we could look for. Number one, here's your rally off of the low. All right, here's your rally off of the low, and here's your pullback. What I like to do is I like to look at pullbacks. I like to look at a rally off of the entry zone or entry area if it pushes in and then comes back up. I like that. I like to look at entries. Sorry about this. Let me just fix this. Okay, MetaTrader 4. Let's just do this. Try that again. So I like to look at entries on pullbacks after the market goes down. Now we did a couple of them actually. This right here we actually looked at in the live room, and we took that pullback, and it gave us really not much action, and we ended up breaking even on it. All right, we took that break even. Point is, this was set up as an entry area for the scanner on the higher time frame, and then when the market moved down, the scanner is following it down. It's still repainting it. That's what it's supposed to do. When you hit your entry area here, one of two things. Number one, you could be aggressive and enter there. There's nothing wrong with that. Or you could wait for a bounce and then a pullback. And in this instance, what I like to do is I like to put a stop right below the market. Okay? This would have taken a stop out. All right? You would have bought the pullback, it would have taken a stop. Had this market shifted, all right? Had this market done this and back up, I would have once again looked at the retracement again. However, this went sideways and down, all right? And a lot of risk on the table. There's no need to put so much risk on the table. I like keeping my entries tight. Even though it's a higher time frame, you want to be able to enter into a lower time frame trade. That eliminates your risk. There is no need to take all this risk when you can sit and wait for that higher time frame to set up. Oops, I just did something and erased it. You're waiting for that higher time frame to create the pattern, and then you wait for the lower time frame to enter in. Okay? So I just obviously just erased it. So not a big deal. Let's look at okay, here it is. So I would have rather taken a small little pullback, and if it failed, so what? I could always wait for it to go up. But to take a huge move like this to the downside, it's not a good thing. You don't want to do that. You want to keep you got the higher time frame and you keep the lower time frame entries in your favor. Let's look at another example that we had in the live trading and educational room this morning. Let me get rid of this rectangle. And let me get rid of this. Okay. So let's take a look at the EUR GBP. This morning, we looked at the fact that this market hit an entry area right there. And now we watched it bounce. Let's go down to the smaller time frame. I want to show you something. I'm not going to show you that. Okay. So when this market had first hit the zone was down here. All right. Okay, this is the first time it hit was down here. Market rallies, market pulls back. We took the buy on that in a live room. Market ended up going up, fine. It came back down again right here. Came back down again right here. So we waited for it to run. You got a pullback. You could wait for that, and it runs. I'm showing you the difference between being patient and not being patient. One more time. Market hits support, bounces, pulls back, right? You see that? One more time. Market pulled back to support. Now this, so you remember, this whole area down here of support. You see that? I don't like jumping in. I like waiting for the market to give us these little pullbacks. Sorry for my voice. Then the market rallied, and now you have a pullback. You see? If we go to even lower time frame this morning in the live trading room, we looked at this. Okay, we looked at this. We looked at this. We looked at this. And this pullback for a buy. Okay? And we watch and see if it can come higher, and the market had a pop. Even if you were able to take a little bit, great. But our next play was that potentially this can happen. Okay? Let me see here. Market can have an A, B, C correction. We also were looking for a pullback in this whole trend. Okay, like that. We basically were looking at roughly, if we took the Fibonacci swing low to high, a 38 to 50% retracement here. All right, so we had discussed this in the live room today, that because the market started impulsing, we could have a retracement 38 to 50% on a pullback. It gives the opportunity to buy. You're not trying to buy down here and try to catch the turn. Let the market move, because if we look at the higher time frame, and forgive me, it's all messed up. If this market's going to go up hundreds and hundreds of pips, you don't want to risk hundreds and hundreds of pips. That's where the edge comes with having the harmonic scanner. Think about this. First play, bang, buy, comes down again, buy, comes down again, buy, comes down again, you pull back, buy. You have multiple entries. If this market's going to go up, 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 every time you're pulling back, you're buying it. But you're not doing what we looked at on the other chart, is you're just buying blindly. You see right there? All right, there is no reason. Nothing is telling us that there's a shift in momentum. Should this had done this and then done this, fine. We can do that. Here, see? All right, you want something where you're putting that pullback. But when you're in such a deep, weak trend, you don't want to. This is called buying a falling knife, and you can get yourself into trouble. We don't want to do that. Let's take a look at a couple of other markets here. All right, so now you got the GBP AUD reaching down. Here's what I'm doing. I'm looking at where this market's going to stop going down and turn up. So let's, for instance, look here. What I would like to do, remember, here's your risk, right? That's if you're actually risking. That's just the pattern risk. I want to see this pop up. I'm not worried about the targets. I want to see it pull back, even if it's here. Even if it's here. I want to see this pull back and give me an entry and then put my risk underneath the market. That's how you have a low risk into a much higher time frame. EUR NZD. Here we go. In in first glance, it looks like a buy, right? Let it go. Let it bounce. Go down to your lower time frame. Even go down to a 15-minute chart. All right. You wait for the market to shift, back up, and then back down. These are key entry techniques that I use and I've been very successful with. Once you get your pullback, you do that. The market always does it. Look, comes down, right? Always does it. Have your rally, have your pullback. All right? It always does it. All right? Even here, off the low, pullback. Okay? You can then manage what happens from that point, but you're always going to get that. Let me see EURJPY. What do we have here? Okay, we're in support on the EURJPY. Let's go to the 15-minute chart because it's a lower time frame. All right, let's let this come up a little bit more. Let it come up more. It's still deciding if it wants to go up or not. Once it goes up, then you can worry about the pullback. All this data down here, all this, if it holds, this becomes what's called value. It becomes a support. All right. I want when you guys are trading, or guys or girls, when you're trading with the scanner, to have respect for the market also. Let this go up and let it pull back. This is going to be a natural support down here. All right. Same thing. You see it all the time. All the time happen. All right. Get used to it. Get familiar with it because that's how you really want to trade these markets. You don't want to just jump in arbitrarily for no apparent reason. Same thing to the short side. See the AUD there's no reason I would want to trade this right now. What I would want to see, and this is on an hourly chart, I want to see this. I want to see this come down, okay? And then get a bounce. And then look for a shorting opportunity for another move back to the downside. All right? I'm sorry if there's some background noise. There's another meeting going on, and I'm in my office. So, real important, guys, real important. Uh, you want to take the time and let the entry techniques work. You don't want to just rush into a trade because it hit the zone and feel you miss it. You know, the scanner gives you so many opportunities. If you keep your risk on such a shorter time frame, but with the bigger time frame pattern, let me ask you, more times than not, you're going to succeed. This is how you catch 100, 200, 300 pip moves, 500 pip moves with the risk in 30 or 40. You see? That's how you want to play the game. Think about this. If you risk 20 or 30 pips or 40 pips 2 or 3 times and you hit one for 300, you see how that works? Most traders think I'm going to risk 1 to win 2 or 3. I'd rather you risk 1 to win 10, all right? 1 to win 6 or 7. That's the best way. The scanner to me is an ATM machine. It's a money pit, not a money pit, a money machine that just keeps on giving us opportunities. But you have to be on top of it enough to know you're not just going to jump into things. I'd rather you guys take these trades. Let's take a look here. Let's just take a look at what happened. Here's another thing. You don't always have to wait till it comes down here. All right. When that pattern starts drawing and you see the shift, I'm all over this. If you're in the live room with me, you know. Let's just take this right here. Remember, the size of the time frame is high. This went up. You feel like you missed it, right? You're getting that pullback. Most of the time, you get that 38 to 62%. You get your Fibonacci, you put it up, you're right in the zone. This is what I like to do. And you see how where you could put such small risk in place. You're defining the fact it stops going down, it rallies, and this pullback here, that's what you look in the buy. Anywhere in here. And look at the size moves you get. So if you think about, you risked, what was that, 30, 40 pips, and you're up 100 150 already. You see, that's what I like to do. That's how we play the game. Don't feel you need to just jump into a falling market because this market's falling. No, you let it pull back. Now, if you get a bounce like this and it pulls back and you get stopped out, so be it. You wait for the next one and you wait. All right? You keep waiting for that shift. All right? You can see that. All right? So, anyway, I thought I'd make a quick video. Entry techniques. Entry techniques. Be patient and just be patient. You'll see how simple it is and keep your risk at a low. All right? My name is Christopher Terry. Thank you very much for watching this video.